saw the Canadian dollar pick up in a big way this morning after the Canadian economy posted the single biggest month of job growth in history. Let's get some reaction now from David Rosenberg, who's chief economist and strategist at Gluskin Sheff and Associates, joining us from the TSX in downtown Toronto. What is the Rosie reaction, David?
The Rosie reaction is to borrow the refrain from Mark Twain, which is that there's lies, damn lies, and statistics. And
so even you, David Rosenberg, are not convinced by this. BMO's assessment says there's no way for even the staunchest of bears to spin this. This is a good jobs report as you can get. Where's your qualm?
Right, so you'd ask me, how I would grade the jobs report.
Yeah.
So it's like the jobs report gets an A, but it's like you're a teacher in high school and your dumbest student just handed you an A report. And you just don't really know what to do with it. So we can give the jobs report an A. I don't give it an A, by the way, because I've actually gone through the details of the full report. But if you believe this number, then de facto you implicitly believe that productivity is declining at a 2.5% annual rate. Because the one thing that we do have a handle on is we know where output growth is in Canada. And it's not growing any better heading into the second quarter than a 1.5% annual rate. So look, in the good old days, when we actually had good productivity in this country, if you printed a number like this, you'd be talking about real GDP growth between 4 and 5%. But I got news for you. Whether this number was 100,000, 200,000, or 50,000, we know what the economy is doing. Labor is just one input. So the fallout from this, and why I would be saying that you actually want to fade this Canadian dollar rally, is the implications for productivity, the other factor of production, is decisively negative. The bottom line is that I don't believe that productivity is declining that fast, but I don't believe in the veracity of today's employment data, which, by the way, was so totally concentrated in people between the ages of 15 and 24. Maybe Canadian college students got let out of school early this year, or they finished exams in March. But if you take a look, for example, at some of the key components, for example, male employment in the breadwinning 25 to 54-year category, adult male employment actually didn't grow at all last month. And their unemployment rate for people in that range actually went up 1/10 of a percentage point. It was very concentrated in the youth, whether you're taking a look at the employment, the labor force, the participation rate. For whatever reason, there's a real demographic skew to this number. And then to take a look at the sectors, I thought that we were battling a housing bubble in this country, and we had like a huge construction increase. Hard to believe. The components related to consumer spending, wholesale retail, huge. Meanwhile, we know that Canadian consumers are going on the debt treadmill and doing more to repair their balance sheets than head out to the shopping mall. So the bottom line here is that this number did not pass the sniff test. I would have to see 2 or 3 more months of follow through before I would put my reputation that this number is really reflective of what's happening in the Canadian economy.
David, let's look backwards, though, because before the March report, we had seen a 6-month stretch where 290,000 jobs were created. So you add this number in, you do a little subtraction for the month of March, and you're talking about 390,000 jobs being created basically over an 8-month stretch for the Canadian economy. Why did we see that jobs growth?
Well, we saw the jobs growth, and as I said before, we also saw what happened to productivity. So, look, we can sit here and debate what are those job numbers doing, but in the final analysis, how you measure a company's economic success is real national income or real national output per capita. So we know what the economy is doing, so you can create all the jobs in the world, but if output isn't growing, or if it's growing fractionally, what is it telling you about output per hour worked? So I think that's the missing link here, is that I come on here every single month and the job numbers in Canada are absolutely unbelievable, and yet we know what the economy is doing. So I said before at the outset, what's the fallout from that is productivity. It's interesting because do you really believe that in the month of April, the Canadian economy in the household survey generated 106,000 jobs, best of all time? And yet in the United States, in their household survey, the comparable apples to apples, that when we got the data last Friday, that their employment, not non-farm payrolls, that's the survey of establishments, the comparable survey to Canada, the US a week ago generated a loss of 103,000 jobs. Now, I didn't see many people talking about last week's household survey in the U.S. just suggesting that we had a negative print. And so all I'm seeing today is everybody jumping over this plus 106,000 print in the comparable survey in Canada. So you can't have both. Most people don't believe the household survey in the U.S., but the same economists on Bay Street believe the household survey in Canada.
But I wasn't really asking you I didn't really want to debate it. I just wanted you to explain why the Canadian economy added basically 390,000 jobs over the last 8 months.
Well, employers are adding to payrolls in Canada. If you believe the data, like I said, this is a volatile household survey. Admittedly, you're going back 6 months, so you can say I'm smoothing it out. I think maybe it comes down to the sort of workers that businesses are hiring, what's left in the labor pool in Canada with the unemployment rate as low as it is. But maybe it says something about the quality of the labor that's left in the pool, because the fallout from all this is negative productivity. So my answer to your question is that we have to address not just the strong employment number. This is not like the 1980s or even in the 90s when you would add jobs and we'd have strong growth. We're adding a lot of jobs, record, as we just saw, if you believe the data, but we know that output growth is very weak. So what it's telling you is the jobs we're adding are increasingly less productive jobs into the economy. And so that's actually a problem.
I hear that point, and you're saying, if things were really that strong, if we were getting this number, we should be looking at something closer to 4% GDP growth. But are there things that this kind of jobs growth, whether you believe the number or not, let's directionally believe that Canada's economy, in terms of its workforce, is expanding. Does it not blunt some of the more bearish views out there that the consumer is going to remain under pressure, that we're going to see an uptick in delinquencies? Because employed people generally, that's a key measure of delinquencies. As long as you've got strong unemployment, typically you don't see uptick in delinquencies. That kind of link can be made. Can you not argue that it at the very least blunts some of the more severe downside risks that a lot of people have been calling for?
I believe that you can buy into that argument that it blunts the downside risks. I think you can look to the wage data having improved, from really extremely low levels of growth at the end of last year. My sense is that, the mindset of the Canadian household right now is going to be more towards accelerating debt repayment and improving their balance sheets than actually going out on a spending spree. And so, look, I'm not trying to just absolutely dismiss this report out of hand. It's basically a situation where there's been this huge disconnect for a long period of time between the employment data and the underlying economy. So either the employment data are wrong, or either the production and output data are wrong, or there's something nefarious going on with productivity. You can't have it any other way. I'm very skeptical about the Canadian household survey. It's moving around. If you're taking a look, for example, look at the labor force. I think the labor force was negative 11,000 in the month of March. I think it surged by something like around 100,000. Do you really believe that the Canadian labor market is so volatile that we could have an 11,000 decline in the labor force in 1 month, followed by 100,000 increase in the next month? Like, is our labor market so more volatile than the stock market is? It's hard to believe. And like I said before, so far this year, in the same survey in the United States, and I can't speak to anybody in the U.S. that is not unbelievably bullish on the U.S. economic growth, but the household survey in the United States has shown employment declining 300,000 this year. You know what? Nobody knows that number. So somehow we're creating record jobs, and in the same survey in the United States, they're losing jobs in a significant way. It's not being picked up in the payroll survey. So what I'm trying to say is, calm down a little bit. There's no way that the Canadian economy is running nearly as strong as this number would lend you to suggest. And I would then say that if you are a full buyer on this report today, then boy, is productivity growth in this country ever deteriorating fast. That's reason enough to sell the Canadian dollar into this rally.
I mean, at what point do we say enough is enough then if we truly don't believe this labor force survey? And, you know, that seems to be your key takeaway. We've been talking about this for years, that it moves around. It's notoriously difficult. But you've got the markets trading on it, at least the Canadian dollar. And I have to believe that the Bank of Canada at least acknowledges it and it somehow informs their policy making.
You know, I come on the show when the Canadian employment numbers come out. More often than not, they seem to beat the consensus. The moment I'm here talking, the Canadian dollar is going up. But then when you take a look at the trend of the Canadian dollar, if I'm not mistaken, going into this number today, we were down almost 74 cents on the loonie. So, you're right. The markets are trading off this number. Make no mistake about it. I find it a little fascinating, mind you, that the markets didn't really trade off the household survey last month in the United States. Most people don't even know that in the household survey in the United States, employment's down 300,000 in the first 3 months of this year. Everybody thinks the recession is out 2-3 years, and yet household employment in the United States is every bit as weak as these numbers are strong in Canada. So I just think it says something about the inherent volatility in these household survey numbers. I'll wait for although they're lagged, I'll wait for the establishment survey data in Canada to see if there's follow through in that particular survey. But as I said before, we've known all along what output is looking like in Canada. It's been extremely weak. And you can't have it both ways. If we're having a situation where employment growth is lagging this far behind output growth, if you do believe in the veracity of this data, I mean, I don't, but if you do, then what I'm saying is that in the name of consistency, you have in your economic framework a declining productivity trend in Canada. And that has its own particular nefarious impact. So it's not just about what employment's doing. You have to take a look at the other factors of production, which is productivity. And that's the elephant in the room right now as far as the mismatch between these great employment numbers and what we do know for a fact is a very poor output performance that the economy's turned in over the past year.
All right. So are you a Raptors fan, Dave? They're doing well, but you think they're going to pull it out this weekend?
That's a forecast I have.
Are you going to have a good weekend, Rosie?
I'm the good humor man. Remember that. You caught me in a good space this morning.
David, thanks so much. Always appreciate your insight.
Same.
David Rosenberg of Gluskin